Taiwan index is holding on to gains of around 0.5%.
Supports come in at about 23,189.
The bank, last two sessions, it's been showing that it wants to put in a bit of a fight.
Bank interest rates will have to be far more affordable.
90 points, so 23,500 plus, 77,570 or so on the sensex.
One place to look at is China, because they do have a lot of powder dry, which they can use to stimulate their economy.
QE percentage has reached a 68%, January to October.
A dark green on the screen after a really long time, and its portfolio includes both solar as well as wind power assets.
And not burden customers with insurances which they don't require.
Good day for the bulls. It's a bounce back that we're seeing after 7 consecutive days of fall.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that is the day so far, and it has been a good day, a strong day, and in the green for almost all of the session. Actually, it has been in the green, and no looking back, really. We're off the day's highest point, but still looking pretty solid. This is Closing Bell. We're coming to you, as always, from the CNBC-TV18 Motilal Oswal studios. It is also the last hour today, and as we go into that holiday tomorrow with Maharashtra elections. I'm Prashant. With me, my colleague Nigel. Nigel, hi. Afternoon.
Well, it had the ingredients, right, of having a good trading session, and until now, it's lived up to that. So going into the state election, expecting, some kind of optimism, as is it will be a bouncing back from bombed out levels.
Absolutely, and looked very oversold, and the bounce materialized, and I think that there was a tailwind of sort of better cues from overnight as well. I mean, it was a mix of things, but now, of course, I mean, with one day's reversal, when you talk to people and the excitement's maybe not too much, but slight excitement is back. The common chatter is if with a little bit of selling pressure, the market can reduce selling pressure, but still a sell figure, the market can do this. What can happen if that number, that FI sell figure goes down even more? So that's natural. I mean, it's, markets dictate the mood, and the mood is right there at this point. Well, just some levels really. So we're exactly at the 40 hourly exponential moving average, which we put out in the morning as well. Actually, now as we start, we've come off a little bit from there. So 23,748 is that hourly average. The high is about 23,780. So 23,750 to 23,780 becomes that range, which I mean, ideally, if you close above it, then you basically open up the room all the way to about 24,100 or so. So we'll see what the last hour really gets us. Nifty Bank, the last I checked, is trading above the 40 hourly, which is 50,828. Okay, we're exactly there, 826 at this point. Again, I mean, a close above this will be nice. Next resistance comes in at about 51,260. Auto, real estate, and IT are the top movers that we've got going as far as sectors are concerned. So lots of auto stocks, again, sold off quite aggressively. Names like Hero, Mahindra is another one which we'll talk about in some more detail. Real estate, IT, of course, 2%, 2.5% cut yesterday, and a bit of a comeback today as well. But as I said, I mean, you've got polling tomorrow, and tomorrow evening you've got the exit poll results. And to be frank, I mean, it's not as if markets are going to be by the edge of their seat waiting for what the exit polls throw. It's not that Maharashtra state elections are not important. It's just that exit polls, at least this year, have had a pretty dismal record of predicting what the actual outcome is going to be. So, it'll matter, but I think it'll matter to a lesser degree as compared to what we saw during Lok Sabha elections, or actually even during the Haryana elections as well. So that's, of course, only day after tomorrow. Tomorrow is a holiday. Nigel.
Well, I think we've got an important conversation that's lined up. Sapna's in conversation with Mr. Pandey, the DIPAM secretary. So let's cut across to that conversation. Sapna?
In conversation with the DIPAM and Finance Secretary, Mr. Tuhin Kanta Pandey, he wears many hats. He's also additionally in charge of DPE, that is Department of Public Enterprises, as well as DOPT. for today as of now. Thank you so much for joining us, sir, giving us time once again. Just wanted to check up with you, sir, on the latest CPSE capital restructuring guidelines which have come out. What is the intent of the government, and is it correct that this review, the basic template, has actually been revised after 8 long years?
Yes, I think it's basically an update after the experience of 8 years, taking into board the new realities, the new valuation systems which have emerged in case of CPSEs. Also the fact that we had issued certain interim advisories which have also been consolidated, plus providing, the objective of our main objective of providing operational and financial flexibility while giving, due returns to the minority shareholders.
Okay. So now, if I look at it from the point of view of dividend payouts, for instance, some relaxation is visible there, against the 5% net worth, it's now 4%, a tad lower than the earlier regime, and also you have done away with the net worth criterion for CPSE NBFCs. So that's one aspect. You can elaborate on that, sir. But apart from this, have some of the conditions been tightened, quote unquote, as far as your stock split, share buyback and bonus shares are concerned? Could you clarify?
Let me come to the dividend part. Dividend is basically the minimum guidelines, not the ones which they would be capable of giving. The boards are independent and they may give more than that as well. In some cases, even the minimum guidelines they may not be able to fulfill. But there, we have a system of, granting exemptions to them on their request. In the minimum guidelines, there were 2 conditions. One was the net worth, another was the payout of the profit. So you have 30% of the profit, PAT.
That remains unchanged.
That remains the same. The other condition was that there were 2 conditions, whichever was higher, 30% of PAT or 5% of net worth, whichever was higher. We have made it 4% of net worth instead of 5%. And the reason is that some of the CPSEs do have their own business plans in terms of capex, in terms of growth, where in their net worth condition sometimes creates a problem. So we have made it clear that, in that case, we will slightly relax it to enable them, sort of more resources for their internal generation so that they would be able to pull into for their growth. The other part was in this case of CPSEs, which are NBFCs, in the nature of NBFCs.
To name a few, sir?
For example, PFC is there, REC is there, IREDA, IRFC is there, HUDCO is there. In these CPSEs, capital is basically the raw material. They don't manufacture. They are basically capital. Their net worth is used to again raise more money and also lend. Now, net worth is important in terms of capital adequacy and other regulatory requirements. So therefore, essentially they are high net worth companies, and if you have a percentage of net worth also as an added condition, and we say whichever is higher, sometimes we would be asking them to give more dividend than what is necessary, and rather their money capital could also be used to lend more. So in any case, that also is advances our objective of giving them operational and financial flexibility.
Okay, all right. We'll keep cutting back to Sapna and when we get some important soundbites on some of the crucial, pending divestments as well. But let's take stock of the market. As Prashant mentioned, it's a good trading session, though we have come off a little bit from the top. And it had the ingredients of being a good trading session. The dollar index was weaker overnight. You had the FI net sell number as well was relatively lower. The good news today for me is that the Nifty has made a higher high and a higher low as well. That's not happened in the last many trading sessions. So that's one positive point to clutch onto. The Nifty Bank, well, that's been showing signs of the last 2 sessions as well. It's not pulled back. In fact, last 2 sessions, it's ended in the green. So that gave you a sense that the Nifty Bank wanted to put in a bit of a fight, as you also on that wrap I'd mentioned earlier today as well, that the Nifty Bank wants to put in a fight. And in fact, now the next reference level for the Nifty Bank on the upside is the 20 DMA that comes in at around 51,400. On the downside, it's around 49,800 or thereabouts. The best part today is that the advance decline ratio is solidly in favor of the number of stocks that are advancing. So at the start of the trading session, it was nearly around 7 to 8:1. That's come down to around 4-5:1, but that's still very, very positive. So your portfolio will be feeling very, very good as well. We have Bharat Forge, that's a stock that you should keep an eye on. I think they're talking about advanced towed artillery gun system. They're in conversations, I think so, and they're looking to bag an order. So that's one of the reasons, I guess, that the stock has moved to the high point of the day. We should get that up back for you on the screen in just a bit. There it comes. They have contract negotiation procedure underway between the company and the Defense Ministry for ATAGS. The full form comes up for you, Advanced Towed Artillery Gun System. So the street likes that. But how do you position yourself? Final hour of trade coming up. Nifty Financial Services Index plays out its final weekly expiry. Mitesh is with us. Mitesh, it was coming. It came. Finally, some green on the screen. When we talk at around 2:30 p.m. on a day-to-day basis, kicking the can down the road, hoping for that bounce. But you were clear yesterday. Cut your shorts. This is not the level to short the index. Where do we go from here?
I think, Nathan, that's the way to approach trading. Good afternoon, because we will not know what point the markets will reverse. But what you can, possibly do is make a guess, which is, backed up by some kind of statistical numbers, moving averages, oversold levels on indicators, etc. And I think what was very clear was the extreme oversold reading means that a bounce back was due. Now, I was looking at a bounce back on Thursday evening as well. It didn't happen. On Monday as well, it didn't happen, I think, and then today it happened. So difficult to guess these kind of things, but the good thing is that the bounce back has happened and now it's not looking like it will slow down very soon. So while the bounce backs tend to be choppy, I think what is important is that the Nifty now holds about 23,620, 625 zones, which is roughly about 70 odd points lower. And if that happens, then I think, this could possibly see some continuation on the upside. And 23,850, broadly 850, 880 is my zone where I think the Nifty will head towards in the next 2-3 days. There will be, as I said, some, bout of volatility. So be prepared for that. But as long as we are not breaking 23,620 on an hourly closing basis, things should be at least up in the short term. Having said that, the stock calls that I have a buy on granules with a stop at about 539 for targets of 570. That's, actually it broke the level of 540, which is an important pivot, and then came back and captured it again. So I think in the short term, that could be a bit of positive for the stock. And the second stock, which I have on my list, is a buy on Indigo, which it's come on the buy list after a long time. Indigo is a buy with a stop at about 40.35 for targets of 41.50.
Okay, all right, Mitesh. So we'll monitor that, and thanks for those trades as well at this point. So 23,620, I think, the hourly level that Mitesh mentioned. So hopefully we stay above it and go home with these gains. Well, let's talk about PSU stocks, right? I mean, they are weaker in trade. In fact, Nifty PSE has seen a fall of about 20% from its peak on the 1st of August. Some of the factors, and just to sort of summarize and put things in context, Hormuz is here. Hormuz.
It's been a while since we spoke about PSUs, right? And they're back in the reckoning in today's session. Some bit of relief coming in from the lower levels. Almost every constituent of the PSE index is currently trading with gains of anywhere between 1% to even 5% for stocks like Cochin Shipyard or IRFC. And most of these names have corrected anywhere between 30 to 50% from their respective record highs that they had made in the month of July and in the month of August. Now, there are plenty of factors behind this fall, right? There was earnings pressure, lofty valuations. Some of them have run up too fast, too soon. And that showed up when the earnings eventually began to catch up, particularly in the first quarter. Now, if you look at the railway PSUs, take a look at this. IRFC, IRCON, RVNL, RailTel, all of them down anywhere between 35 to 50% from their respective record highs. And most of them had made their records in the month of July. The same goes for the defense PSUs as well, barring BEL, which is the latest Nifty entrant, is down 15% from its peak. But there are names like Bharat Dynamics, there are names like HAL. Bharat Dynamics is almost halved from its record highs. HAL2 is down around 30%. The shipbuilders at one point of time were the toast of the street. There's almost every single day they would move up 7, 8, 10%. But look at the fall that they've had from the peak. Mazagon Dock down 30%. Both Cochin Shipyard and Garden Reach have halved from their peaks that they had made in the month of July. Now, there's been recent developments as well. You just heard the DPAM secretary on the capital restructuring norms that have come up on the bonus issue and the stock splits as well. Mazagon Dock has recently announced a stock split where it will split one share into two. And NMDC HSBC too will issue 2 bonus shares for 1. So PSUs are back in the reckoning, at least some bit of relief coming in from lower levels. But of course, it is now time that the earnings finally began to justify the up move in the price.
No, absolutely. Hormuz, thank you very much for that. I think Yash is also standing by. And we're going to just talk about one more space here. And that is the life insurance space. If we can have names like SBI Life, HDFC Life, Max Life, LIC, there is some pressure. Otherwise, sort of up and up kind of a day, life insurance and insurance stocks are seeing selling pressure. Yash is standing by.
Yeah, I think let's go across to Sudeep first.
We have Sudeep with us. Go on.
Yeah, we'll get Yash back to explain that to us why exactly some of these insurance names are under pressure after the commentary that came in from the finance minister as well in terms of bank insurance. So for the time being, let's get it in. Sudeep. Hi, Sudeep. Good afternoon. Good to see you in. We had my colleague Hermes that was just telling us about how these PSU stocks have seen a sharp correction, but now they're gradually bouncing back. There are a few very good themes out there. Some of them ran ahead of themselves. Some of the defense themes, railway themes. Any particular PSU stock that you like?
Well, I do like quite a few of PSU stocks, Nigel. And you're absolutely right. There are good pockets amongst PSUs, but unfortunately, most of them have run quite a lot. And at some level, the valuations were looking really rich. Some bit of correction is par for the course, and I think that has happened. Look at a company like a Mazgaon Dock. I think, fantastic company, great performance. Even look at Q2 numbers. It was fantastic numbers. But of course, the valuation at above 5,000 per share was looking really rich. Now around 4,000, for a long-term investor's point of view, with the kind of corporate action they're talking about, it should be good for a long-term investor. I'm not saying 4,000 is the right price. Maybe a little bit of more correction can make it realistic, but it's a good company and one can look at. Amongst other defense companies, I like the defense electronics space, and BEL in that space stands out as a fantastic company. The valuations are not cheap. But again, from a long-term investor's point of view, this can definitely be looked at. The other pocket of PSU, which I have been liking for last one and a half years, has been the power sector. I think there is a structural positive momentum in the power sector, and that's going to continue for the foreseeable future. The way the power demand has gone up, the way the power companies are performing, the way the leakages have been plugged, I think the entire ecosystem is benefiting from that. So an NTPC, of course, there is an IPO going on of the NTPC Green Energy. Whether it's some of the other power ancillary power equipment manufacturing companies like BHEL. I used to kind of dislike BHEL because of subpar performance on a continuous basis. But last quarter the performance did surprise the market, and if this continues, I think BHEL also can be looked at sheerly on the base of the fact that the number of orders they're getting, the kind of opportunity they are sitting on is huge.
Okay, Sudeep, just hang in there. I want your thoughts on life insurance companies as well, because I was saying earlier, stocks are lower, and this is after the finance minister's comments, basically urging, trying to dissuade banks from selling insurance products, asking them to focus on their core banking business. Banks are a large part of the distribution channel for insurance companies. Yash is here with the worry and what is keeping stocks under pressure. Yash.
Well, Prashant, all life insurance stocks secularly are lower in today's trading session, and that, as you rightly pointed out, has happened after finance minister's advice to ask banks to deter from selling insurance and focus more on their core banking operations. Now, important question is, how does it impact insurance companies and their business? As you said, insurance companies get a large portion of their business from the distribution channel of various banks through bancassurance distribution. And in a situation where that distribution channel comes under threat because of any external reason, that large portion of business gets threatened in the interim period. Now, we've done a simple analysis in terms of which insurance companies could get impacted the most and which could get impacted the least. SBI Life Insurance gets impacted the most because of this advisory from the finance minister. ICICI Prudential Prudential Life and LIC both are relatively, the least vulnerable companies when it comes to this particular advisory on the bancassurance channel. Why SBI Life gets impacted the most? The company receives 60% of its business or premium from the bancassurance channel, largely the State Bank of India. Now, for a company of the size of SBI Life Insurance, it is very difficult to shift from one distribution channel to another distribution channel. And in the interim, the fear is that business could get impacted in the transition from one to another. Also, because the distributor is State Bank of India, which is a public sector bank, it will be easier for the government to direct the course or the direction of business at State Bank of India, and that could also hurt the business. LIC, least impacted, gets only 4% of its business from bancassurance channel. ICICI Prudential Life gets 29% business, but ICICI Bank is not selling any of the large premium products for ICICI Prudential Life Insurance. They only sell term life insurance products, which are very low premium products, and hence business won't get much impacted. For Max Life, it receives 52%, right. HDFC Life 65%.
All right, Yash, thanks very much for that. Sudeep, I mean, it's not a directive, right? I mean, it's just the FM urging. But of course, markets pay attention when the government speaks. Your thoughts on your thoughts on stocks, as you heard Yash explain. Banks are an important channel.
Absolutely right, Prashant. See, a couple of things. One is, as you rightly said, this is not a directive. This is just a FM urging banks from more, I would say, mis-selling of insurance products. If you're rightly selling a product, I don't think there should be any problem. The problem is when the mis-selling happens, and that does happen. So the government's efforts, IRDAI's effort in controlling mis-selling is welcome. But I don't think this channel is going to go away. It's a bit of a premature and I think overreaction as far as the market is concerned. Bank assurance is a very, very well-established channel, and it will continue. And look at the entire life insurance space. We have been positive. IRDAI is talking about allowing 100% FDI in insurance. I think that's a big, big positive, which may or may not happen, but that's the direction in which we are moving. IRDAI also rightly feels that significant amount of capital needs to come in the insurance space, and that's the reason why they want to open up insurance. So I think these are very positive developments. Insurance penetration by any yardstick is significantly low. So the well-established players in Indian market have a long, long runway. So I'm positive in spite of this fall, what we are witnessing today. I think it's a great space to be in from a long-term investor's point of view. And, by and large, I think, you can go and pick up LIC. I think they have started performing well, and a lot of parameters are indicating improvement and future performance as well. I do like SBI Life. I don't know what is going to happen about this bank assurance thing, which is being talked about. But otherwise, SBI Life also is a good bet.
Okay, all right. Sudeep, what about Honasa? Out of nowhere, the stock is down 20%. The numbers were disappointing, and it's down another 10%. More than it's not a company-specific issue. It hurts investors. When these sort of instances take place, because it was way above the IPO price. Now it's way below. But do you find value at these levels of 265, or do you think things are too murky? You'll wait for things to clear out, let the management come clarify, and then you'll take a fresh call?
Well, absolutely, Nigel. I think I'll wait. Things have suddenly gone south in a big way. And the problem is in their core Mamaearth portfolio. They need to do something. They need to improve distribution as well. So there are a lot of issues which needs to be clarified and explained by the management. Let things settle down. I think there are many competitors and many other products which are competing for the same space. So unless things are clarified and things are suitably amended or suitably addressed, I think it's better to stay away. So I'm not going to take a call whether after this 20-30% correction, this is the right price to pick up or not. Let's wait.
All right. We just, that's the view on Honasa. And you were talking about, I think, LIC earlier. LIC came to the market at about 872. I just checked. Stocks at 900. So it's basically gone back to, and of course the high was up north of 1,200 rupees. As Sudeep said, second quarter numbers were very strong. There were, I think, a couple of upgrades as well, but really has struggled. From the lows, of course, it's still up quite a bit because after the listing, it fell down to about 550 odd levels. But from the highs also now, it's come off a decent bit. Sudeep, thank you very much for joining us. Good speaking with you. Thank you for your time. We'll take a quick commercial break here. We'll have Nikhil Ranka with us from Nuvama Asset Management. We'll talk more markets with him on the other side. Okay, welcome back. 180 points. So we're at about 23,630. So coming off, and there's a bit of a sharp downtick, which you can see,
yes,
which has emerged just in the last couple of minutes or so of trade. Maybe just take a quick look at where this is coming from. I think Reliance perhaps is the reason. RIL is, if you can pull the intraday up, it's seen a sharp and is going down as we speak. So from 1265 odd levels at about 250 or so. We've basically given up 10-12 bucks, but that's RIL and it's the largest weighted name, and that's the reason why it's showing up on the Nifty in a pretty stark way as well. So that's the picture. By the way, ICICI Bank is another one which is coming off. The intraday should tell you the same story. Maybe SBI as well. So actually, these are the three names, but Reliance more than the other two responsible for this slight dip that we're seeing. Nikhil Ranka is now with us. He's Chief Investment Officer, Equity Alternates at Nuvama Asset Management. Nikhil, welcome to the show. Thanks for joining in. Nikhil, by the way, was, at least as far as I can remember, one of the first, when he joined us back in September, to flag off the risk of movement of money to China and how the market here could see some FII outflows. I'm not sure, Nikhil, we've spoken after that, or have we once in between? But I remember that pretty clearly. So are we at the end of it now? So just to complete that entire point.
So good afternoon, Prashant and Nigel. And thanks for having me on the show. We haven't spoken, so we were cautious on the markets September end, and we had highlighted this risk at that point of time that India may see some sort of FII outflows due to reallocation to China. Now, what we have done is we went back in time, Prashant, and looked at the history of deep market corrections. And we found a very interesting data point that every 2 years, Nifty does have a 10% market correction for whatever be the reason. So if you look at 2016, there was this Brexit referendum. 2018 was Ireland FS crisis. 2020, you had COVID. 2022, you had the Russia-Ukraine war. And now 2024, we again have, because of FI outflows, this 10% fall. So the short point I'm trying to tell here is that it's market's own way to flush out the excesses and weak hands. But then what you have to also see is every time we have seen this sort of deep correction, over the next 12 to 15 months, markets have gone and made new highs. Now, if you look, juxtapose valuations and positioning along with this deep correction, today, when we are looking at FY26 numbers, we are basically looking at an EPS of 1250 on the Nifty, and we are trading at 19 times FY26 earnings. The moment, 9 months, 12 months down the round, we will roll over to FY27. This 1250 EPS will look more like 1400. And then if you apply a median multiple of 20 times to that, the fair value of Nifty will come closer to 28,000 levels. And if you look at the positioning, the FI ownership on NSE 500 is now closer to 16%, which is almost a 12-year low. So therefore, my sense is that this is the time that one has to be courageous and get excess liquidity deployed in the markets and be patient for 6-9 months. Investors will get rewarded for their patience. If the index itself will give you 15-17% returns over the next 12 months, individual stocks will give you far higher returns, 25-30%. And therefore, we are now completely changing our stance, and we feel that this is the time to be courageous, go out and buy the markets.
Good to hear, Nikhil. I just request you to stay with us. Earlier you were sounding a little bit cautious. Now you're saying we've got that pullback. It's the time to be courageous, put some money on the table, and in fact, play out the next 12 to 15 months or so. Nikhil, request you to stay with us for the time being. We just need to move and change focus. Focus on Indian hotels, actually. The company has announced a 2030 strategy at its Capital Markets Day event today. Mangalam caught up with the MD and CEO of Indian Hotels, Mr. Puneet Chhatwal, started by asking him about the company's margin aspiration. Let's hear him out.
When we started or embarked on the journey of Aspiration 2022, nobody believed we'll do 25%.
Yeah.
Then we came to Ahvaan 2025, when we communicated 33. That's the first time the discussions came, you can do 35. Why don't you communicate 35? I think in a high growth company, you have to be very prudent while communicating margins. And this time, we're saying 350 to 700, and a majority of that growth coming in new brands with a combination of capital light and capital heavy. The management will make all possible endeavors to deliver good, healthy, industry-leading margins. Now, whatever that industry-leading is in 2 years, 3 years, 5 years, I hope we are the leaders. And that's what we can promise. But it was more prudent to promise doubling of margins coming from 16. Now at 33 last year, we can't say it will be 66.
Obviously.
Right?
No, so you said you will be industry leading. Even at your levels right now, you are industry leading. In fact, by the industry, it's not only India, but globally as well. So from here on, are there more downside risks to the margin? If yes, then where do they settle?
I don't think. I think the sector per se has had a great learning through COVID.
Right.
This is the only sector that worked besides the airline sector with zero revenue. So if you work with zero, you, I think, have learned a lesson for your life. And I think that is why you see when companies are announcing results on a global platform, doesn't matter whether it's a global major, regional major, top brands, everyone is reporting very healthy margins because they have got a very nice grip on the costs. So the question of downside for me doesn't arise. I think especially for India, where India stands today, 5th largest, next year 4th largest, in 3 years from now 3rd largest economy, I think it's the beginning of a boom period for hospitality, tourism and leisure sector.
Let's talk about the 700 portfolio that you will have by the end of 2030. From what you have right now versus what you will have in when it is 700, how much of that will be Taj? How much of that will be Claridge's? How much of that will be Ginger? I'm just trying to understand, where the incremental brand share would be, and also the incremental geography share. Currently, you're present in all of the metros. A lot of people are talking about tier 2, tier 3 towns, etc. So if you could give us that portfolio mix.
It's a very good question, Mangalam. I think 60% of our growth going forward will come from the non-Taj portfolio or our traditional properties and selections or in Vivanta. So a lot of the growth will come from our newer brands, especially Ginger, is expected to grow exponentially. We expect to grow rapidly the Tree of Life brand. These are small boutique properties. However, and having said that, we have grown Taj from 50 to 120 in the last 7 years. We have grown Ginger from 46 to 100. So which was the bigger winner is the Taj. And in terms of number of rooms, of course, it will be the Taj. And it has to be the Taj. It should be the Taj because this is the world's strongest hotel brand. It has the potential to become the #1 brand in terms of scale in luxury segment across the globe.
Right.
Number 2, it's our biggest cash cow. It is not just a brand, it's an emotion. It gets us the maximum events, whether G20 or weddings or any other event happening in the country. And number 3, Tajness is what we are known for, which comes with the core values of Taj, which stands for trust, awareness and joy.
All right, seeing revenue double by the end of 2030, which is great news. And actually the stock has been an outperformer. You pull up the chart, of Indian hotels in the last 1 month or so, and you pull up what the mid-cap index has done. It's actually been a big outperformer, and the commentary that's coming out as well is fairly strong. So that stock, in fact, over the last 1 month, it's up 10%. And we'll just plot that mid-cap index or a small-cap index as well up for you. You'll see the way the stock has outperformed. That'll be up for you in just a bit.
Nigel, sorry, just look at the market which is coming off. It's coming off sharply. And I think the reason is, I'm not sure if this is, we'll have to confirm this, but there are some outlets saying that Ukraine has conducted its first strike using these, long-range cruise missiles inside Russia. I'm not sure. We'll have to confirm this with some credible news sources. But if this is true, then I think this is really bad news. I can't spot it, at least in terms of in terms of any sort of Bloomberg or the FT, etc. But a handle, Red Box Global India news handle is carrying it. I'm not sure if this is really true. Remember, just over the weekend, you had news coming in that the Biden administration has allowed Ukraine to use these slightly long-range cruise missiles for strike deep in Russian territory. And we know for a fact, because the Russian President Vladimir Putin has said so in so many words, that allowing Ukraine to use these missiles would be essentially absolutely the red line. And that would mean that Russia is directly in conflict with NATO and that US has entered into the war and not sort of fighting from behind the scenes. I'm not sure if this is the reason. Yeah, there you go. From Bloomberg, information coming through. And I think that is the reason why the market has sold off the way it has. I mean, from the high point of the day, we've given up all the gains actually.
100 points.
So the high was 23,780 and we're at about 23,540. So 200 points, have come off on the Nifty from the high point of the day. So this is very, very worrying news flow coming through. And, this is something which, we've been sort of highlighting as well, that is it possible? And I think I remember Christopher Wood of Jefferies saying that, Ukraine and Ukrainian President Zelensky would want to accelerate and push Russia and sort of, the wider Western countries into a conflict, escalate the situation before Trump takes office, because Trump has said very clearly that he wants to end the Ukraine-Russia war. He's called Zelensky the greatest salesman in the world. So this is escalation right before Trump takes charge on the 20th of January. But there is still time for that. And this is really bad news. There were, of course, once this authorization from the US administration came for use of these cruise missiles by Ukraine, over the weekend, I think it was on Sunday, Russia had launched one of its largest strikes against Ukraine, missile strikes against Ukraine, firing some 120 odd missiles. And now, according to Bloomberg, Ukraine has used some of these missiles against Russia. This is a pretty volatile situation as things stand right now. Nikhil is with us. Nikhil, this is, of course, straight out of the blue, and we're just talking about it as it's happening as we put the news out. Any thoughts at all?
So, there was some news flash on Bloomberg. I had also read that, Prashant, that Russia has allowed to change the doctrine for use of nuclear weapons. But my sense is that a lot of other government heads will intervene in this issue, because use of nuclear weapon is a very serious issue. And my base case will still remain that nuclear weapons will not be used, because that could be disastrous for the whole world in that sense. So the base case still remains that some sort of mediation will happen, and the use of nuclear weapons will not be done.
Okay, all right. Got that. We'll have to wait by for further clarification on that front, though for the time being, the markets have come off the top. Nikhil, let's refer to the year and now. The next big trigger is the state elections, with Maharashtra being the big state in focus. What should the market reaction be if we get a favorable verdict with the BJP-led government coming back and holding on to the state of Maharashtra? What would the reaction be? And if in case they don't, then what kind of a knee-jerk reaction should we expect?
So, Nigel, my sense is a lot of bad news has actually got priced into the markets in that sense. And eventually, if you see, state elections have had very minor effect on markets in the longer run. It's more the central government that matters to the market. However, having said that, Maharashtra is a big state. And to that extent, there can be some short knee-jerk reaction that the markets can see, but it should be short-lived. I don't think that it will have a very far-run effect on the markets in the longer term, even if there is some loss for BJP in Maharashtra. So given that it's an extended weekend and we will have exit polls coming tomorrow, the markets just wants to go easy into the election results. And if the verdict is favorable, then I think Thursday onwards, the market should be back on its path upwards.
Right, and you said show some guts now, put some money on the table after this correction. If that's the case, what's the top theme?
So, as I said, autos is something, they have had decent correction from the top. We have seen in the two-wheeler space almost a 20% correction. And if you look at the monthly sales that have come out in the festive season was very strong for the auto names. Inventory levels have now reduced to less than 30 days for a lot of these auto names, and valuations are also now very reasonable. The two-wheeler space in some of the names are trading less than 20 times. Even on the four-wheeler space, valuations are 1 or 2 standard deviation below mean. So autos clearly is one of the themes that we will look to buy in this correction. The second theme, as I said, on the banking side, especially if you look at some of the banks which have MFI book as well, even there, given the stress that we have seen on the MFI space, we've seen almost 25-30% erosion in stock values from the peak. No doubt there has been some stress on the MFI space, but if you look at the commentary of management, most of them are saying that Q3 should mark the peak of stress for MFI, and Q4 onwards things will start to normalize. If you put this in context with the fact that most of these names are either at book or below book value, these names could give a decent upside over the next 9 to 12 months.
Okay, all right, Nikhil, we appreciate you joining in. Select themes look good. We'll have to see how the geopolitical issue pans out. And post this recent correction may be part of the bad news, if at all, with regard to the outcome of the state elections as well. is in the price. Appreciate you joining and wishing you a good remainder of the evening, and we look forward to chatting up with you rather soon. Well, time to slip into a short break. On the other side, Mitesh is waiting for us. He'll tell us about the technical picks, and Nimesh as well is waiting for us. He'll tell us about what he's picking up on D-Street Chatter. Welcome back. Well, all those 200-point gains that we were talking about, it's almost, washed away right now because we're up only around 25 points approximately. So it's been a good trading session, but these geopolitical tensions have come back into play. And that's the reason why the markets are looking a little bit nervous. Nimesh joins us to help us out with what he's picking up on D-Street Chatter. Nimesh?
Hi, Nigel. As you rightly pointed out, the fresh geopolitical concerns is something which is the reason why you've seen a sharp 200 points fall in the Nifty in the last half an hour of trade. Nevertheless, there was a good recovery in the first half, and largely because the market looks so oversold across large cap, mid caps and small caps. So maybe that's the reason why we saw a bit of a recovery in the first half of today's market. The good news is that the FI selling intensity has been much lower in the last couple of days, and it looks like the large part of the FI selling seems to be largely over. That's the overall feedback from the dealings as well. I guess from the near-term perspective, while geopolitical risk is something to watch out for, the Maharashtra election outcome is going to be equally important as well. We have the results on Saturday. So next Monday is when we'll see a clarity on which way the markets tend to switch. I guess 200 DM is also going to be very crucial from a technical point of view. The good part is that today we've seen an across-the-board recovery in the broader market stocks as well. The portfolio looks slightly better off after today's recovery, but I guess as you also pointed out, the geopolitical risk is something need to keep an eye on for the next couple of days.
Got that, Nimesh. What about individual stocks? What are you picking up?
Well, actually, now that the earnings season is almost over, I guess the trend of blocks are going to happen very soon. So I'm identifying a couple of names where there is an expectation of large block deals to come very soon. GET&D is the first name. There could be a large block. Nearly 15% equity could change hands. ZF Commercial, we saw last quarter as well, the promoter sold a large chunk. Again, there is a possibility of a large block coming in ZF Commercial as well. And also in Piramal Pharma, the buzz is that the private equity may sell some large stakes. So these are the few names where there could be large potential blocks in the days to come. The second name is APAC Durables. There was a feedback last week as well that some larger HNIs have sold after the recent rally. There is a large block today. I understand an FI was a seller and some investors were buyers in today's block. So disclosures, if there is any, could be quite interesting in APAC Durables. The third name is Kiri Industries. This is surprising. Overall weak market. This stock has actually outperformed. This month, the stock is up 33%. The volumes are on the higher side. I understand some larger HNI investors are quite active buyers as well. So maybe something is brewing in Kiri as well in the last couple of days. And the last is Trent. We've seen a good recovery in Trent as well in today's market. In fact, post the Q2, there was a sharp sell-off. But at lower levels, I understand a leading domestic mutual fund has been aggressively buying Trent in the last couple of days. And today also there are buy flows at leading FI desk.
All right, Nimesh, thank you very much for that. So those are individual names coming through. How the market has come off, right? An hour back, it was nicely cruising. When we started the 230 at 230, we had, we were near the 23,700 plus minus, and now we're under 23,500. And news, of course, coming in from Russia, Ukraine, which is one of the theaters of war. Which was in the backdrop. The wars continued, has started in 2022 and has gone on for about 2.5 years, but it was fading in the background. But suddenly, it seemingly has entered a pretty dangerous phase, for the reasons that I explained earlier. This is, of course, Bloomberg, which reported that Ukraine has, fired off some long-range cruise missiles with the sign-off from the U.S. administration into the Russian territory. This is, once again, I want to make it clear, news which we picked up from Bloomberg, and Bloomberg in turn is quoting a Ukrainian news service. So just to make it very, very clear, but markets have reacted very sharply, not 200, but to almost 250 odd points off the day's highest point now. Is what we've seen. We'll talk more about this. Mitesh is with us with what can one do in terms of trades. Mitesh, very different looking screen suddenly. Your sense?
So I did mention that bounce backs can be choppy, but this choppy was beyond to understand and imagine at the start of the show. But I think the oversold situation still persists, and I still am hopeful that unless until the Nifty starts breaking below 23,400, I think there's again a chance that that would be retested, and we might make one more attempt to 23,750, 850 zones. So I think these are the levels which I'm watching on the upside. With that, I'll take one BTS and one STBT call. Maruti, I think is interesting. So we'll take a BTST here with a stop at about 1,970 and a target of around 11,050-60 can be looked at for tomorrow. And RBL bank is on the negative side. So STBT here with a stop at about 158 for targets of 153.
Okay, all right, Mitesh. Thanks a lot for that. Well, time to slip in a short break. As we do that, here's a very mesmerizing performance by none other than PVR's Ajay Bijli and his music band at the CNBC-TV18 Global Leadership Summit.
Okay, welcome back. You're with us here on Closing Bell. Markets, of course, got about 40 points on it, off the highs by quite a bit, as we've been, of course, highlighting, largely because of the geopolitical escalation in the Russia-Ukraine war. Jay Bala is with us, cmtcatchthechaos.com. Jay, good to have you with us here. Thank you for your time. Of course, suddenly the developments take a different trajectory, different speed, and we'll have to watch what comes of it very closely. But purely price action, how would you read it? It was coming up to be a nice, decent bounce. And I think the last time you were on, you were saying we will get a bounce, which then will get sold into. But, this has been, 4-5 hours worth of a bounce. It's already gotten sold into for external reasons.
Yeah, see, the market structure is such that it's nicely placed for a bounce because the trend line from 2023 low is coinciding with yesterday's low. And there are two possibilities here. This bounce is actually a correction of only the November 6th high to the November 18th low, which means that the low of 23,350 will break really soon. But if it's a bounce that's correcting the larger decline from 26,277, then we have little more room for the bounce to travel somewhere close to about 24,400. So we'll know in a couple of days. But 23,142 is extremely important from a very short-term perspective. If that were to have a break, we are anticipating, this market is saying that there's potential for extension of the move that started from 26,277 to extend much further immediately. Although, even the bounce comes to 24,800, even then we still have much more selling to come through. What we are seeing is just a temporary reprieve, but how much of a temporary reprieve and how much of the move is happening, which is the correction that's happening, either the November correction or is it the September-November correction? That's the only question that's here.
Yeah, I was thinking, even before this entire geopolitical issue cropped up, I said Jay is going to come and say it's going to be a good market to short. We came off the top already, but if we break this 23,140 thereabouts that you're talking about, how deep can we go? And I think your view is that the Nifty Bank is going to lead us down. So levels on that one.
Yeah, see, we have been focused on the June 4th low from the 1st of October, so there's no change in that in the medium term. But when it comes to the Nifty Bank, it's ICICI Bank, Kotak, and Indus are the weakest ones. Even Axis is the weakest one. HDFC right now is providing the support. But if ICICI were to break 1346, I think it'll bring the break of 49,900 on the banking index. So on both these names, there is a conditional short. Wait for ICICI to break 1243 and wait for Nifty Bank to break 49,900. Both have potential to drop about 1,100 and 47,000 respectively. So, the next leg of the decline is probably going to be led by bank, and there's an overnight risk. NVIDIA has come to an important resistance, and it's shaping up like it's ready to drop about 50%. I'm anticipating it to drop to about 75, but I don't know if it's not completely clear if it's satisfied the minimum or the maximum potential for it to go upside. We'll know it on Wednesday night, but be watchful of both these.
Okay, what about the dollar index? Where is it headed?
Yeah, dollar index is likely to cool off a bit, but the next 2 days for the dollar index is very important. If it were to take out the high registered 2 days ago, this is about 2 sessions ago, that's about 107 point something and change. If that were to get taken out, we are expecting the dollar index to extend the current leg of the move and travel to 109 more immediately than on a slightly higher time frame. So the high of 107.4, I think that's the recent high. That's very important.
Okay, all right, Jay. Appreciate you joining in. Request you to stay with us, though. We have more to chat with you in just a bit. For the time being, let's wind down the markets. The biggest losers today, the life insurance companies, SBI Life, HDFC Life, both of them very nervous, down 1.5 to around 3%. Metals came in for some profit taking. Hindalco was down close to 2%. Big boy Reliance Industries, that U-turned close to 3% from the day's top, and that was the one that put a lot of pressure on the index. What did well? Mahindra & Mahindra and Tech Mahindra, both of them up between 2 to around 3%. HDFC Bank, that's trying to hold one end up, but that's only so much it can do, was up close to 2% even in today's trading session. And from the broader markets, a lot of stocks moved around. Max Financial was down 4%, JSPL was down close to 2.5%, Vodafone Idea at multi-month low, so that stock continues to struggle. On the flip side, Mr. Goenka says that he's ready to step down. So we have Z that is flying away up close to 6%. Dalmia Bharat made a good move, 3.5% higher. And Deepak Nitrite as well was up 3.5%. So to sum things up, it was otherwise a good trading session till the final hour of trade, till we got the geopolitical issues that cropped up yet again. And that's the reasoning why we came off the high point of the day. That spoiled the party, so to call it. So hopefully there is better sense that prevails and there is de-escalation when we come back on Thursday. But for today, that was the sow point, and that's the reason why we came off the top. On an average, though, we'll see that the Nifty actually ended above that 23,500 because of averaging of the last half-hour trade. For the time being, I'll tell you what. We'll wrap up on closing bell. You don't go anywhere, though. Markets Forward is waiting for you on the other side.